All right. Hello, everybody. Welcome to today's presentation of 2025 Trading the Year Ahead, presented by our wonderful trade service Options Gambit and yours truly, Christian Tharp, CMT, Chartered Market Technician. As always, real quick before we get going, I always like to make sure everyone can hear me. So if you can, feel free to say hi, throw some comments in the box there. You can see the screen in front of you. And we'll be off and running. Otherwise, we'll give it a few minutes anyway, just to let others tune in. Usually takes a few minutes for everyone to tune in after the final reminder goes out. All right, thank you, thank you. Hi to you as well. Everybody else, don't be shy. Feel free to chime in. Hey, Barry, how are you? We'll make sure to get things rolling here. I'm going to go ahead and put the little disclaimer up here, get that out of the way for everybody if you want to browse it on over. And pretty simple, straightforward stuff today. We'll talk a little bit about, Options Gambit, of course. I don't know what we'd call that our flagship trade service. I think maybe that's prime time. But Options Gambit's a great service to kind of get introduced to me. It's a nice, steady, profitable service. Doesn't get too terribly crazy. Old fashioned calls, puts, strangles, things of that nature. And good morning to you as well, Tom. What, Tom's about, what do we got, 10 o'clock in the morning for you out there? How cold is it, Jeff? We've got currently, I think we are getting in the 20s today. No, I'm sorry, we are at 18 degrees. So it's wonderful here. Hopefully it's not colder than that. But 72. Joe, it's 72 where you are right now? 72 degrees. Holy moly. I think I just shed a tear. Hey, Frank. Hello from Toronto. By the way, pretty casual when I do my calls and webinars and such. I don't do a whole lot of canned slides and everything. I got a handful here we can look at, but we'll switch over to the live screen here in a little bit and I don't know, look at some trades, look at some currently in a trade right now that we're kind of sitting on and waiting in Options Gambit, but all right. Oh wow, Brett's got 6 whopping degrees. All right, I won't complain. My understanding is it's supposed to get to like 50 on Tuesday. So making our way, at least trying to. 73 in Palm Desert. Outstanding. Hey, Paul. See some familiar names here. Got Paul, got Alan, got Barry. Got quite a few. Steve. So some of you might already not only be familiar with Options Gambit, but might already be members as well. So we'll talk a little bit about that. As I said, I'm not a big fan of long, drawn out presentations or anything like that. Kind of feel like we do our best work when we've got just a live trading screen. Kind of talk a little bit about markets. Obviously, that was the theme of the day, and what to expect in the year. So real quick, that's me. That was my old office here in Columbus. And for those of you that are not familiar, um, with me, been trading for over 2 decades. Became a stock and options coach back in 2007. Initially started with stocks because that's what we did over at Adam Mesh Trading Group. It was strictly stock trading. But I was an options trader. So once we started taking on the options crowd, it was a pretty easy fit for me, pretty easy segue. So over that time, we did a lot more coaching back then than now. Now we do kind of group coaching as a part of the trade alert services, right? So members of Options Gambit, we had a call yesterday, and we talk about the things we need to talk about our trades, break down markets, and so forth and so on. Back then, we stopped counting at about 5,000 students. That's in one-on-ones. So I mean, if we start talking about students I've been able to work with in group settings, that's, I'm sure, tens of thousands. I don't know that we could ever count that, but you may hear me on Adam's calls, Adam Mesh Prime. I show up there with him and his Mesh Insider call. I do have my own mentoring service, kind of a private service. A couple students a month we work with, lifetime trading system, and then as I mentioned today, we'll talk a little bit about Options Gambit, which is more of like a swing trading service, I suppose. It's pretty much what we're shooting for. And then I became a CMT back in 2009. So, that's about that. All right. So I don't know if you have any questions on me. Like I said, I don't really spend too much time talking about it. I like to get to the nitty gritty, but it's probably be the last presentation we do along the lines of, hey, what to expect this year, and the reason why we. Um, wow, Vic, how long ago was that? Gosh, that had to have been a while ago. I've got some that are still here a decade and so forth later. But yeah, so the reason why this topic comes up is obviously every 4 years, there's going to be the banter back and forth, what to expect, what's going to change, what sectors, so forth and so on. And so, as you can probably imagine, being an analyst, we get that question a lot. Hey, what do you see coming this year? And I'll be honest with you, I don't really separate years, from one to another. I'm a huge fan of trading what we see. So whatever the market plans on doing, we're going to read it the same way each time. Uh, we're gonna break it down. We're gonna look at what the markets are telling us, and it doesn't matter who's in office. If the market gives us some signs that we could be in trouble, great. It really doesn't change much of what we're going to do. You know, Now obviously, if we are thinking that we have a more volatile year in store for us, that certainly could slightly change what we do, but not really. I mean, the great thing about trading in options gambit is up, down, sideways. We kind of trade the market the same, regardless of that direction and or volatility. I will say we tend to do better when there's more volatility. All right. So anybody on this call that is a part of prime time, or in this case, options gambit, I'm sure you could attest to the lower the volatility we have, the more we struggle a little bit, right? We kind of go straight at it with calls, with puts, with strangles. We go for the bigger hits, and so um, the bigger moves we can get, the better we will do. The less volatility that we have, the more it kind of might struggle for us a little bit. But all right, so what do we think going into this year? Do we see anything special? I'm going to run through some charts that I went through the last time I did this webinar, which was about a month or so ago. And, make of it what you will, right? Obviously, we get a lot of talk about, recession and such. Is there one coming? Is it close? Is it closing in? Um, Obviously, of course, for us trading it, what do we think of the market? And keep in mind, market doesn't need a recession, obviously, to have a correction. Market doesn't necessarily need a recession to have a bear market. Okay, we don't really have to have a recession. Now, more often than not, if we have a recession, we're probably going to see some market turbulence. So, um, from time to time, I'll show different charts that I come across. I kind of stay in my lane, which I think most traders should. So I don't get too much into trying to be an economist. But whenever see those that are doing that heavy lifting for me, I like to share those types of charts with the members of my services so they can kind of decide for themselves. Okay. What I can tell you is that when it comes to any kind of major market calls as it pertains to sell-offs, and I'll show you, in a moment here when we switch to a screen. There's, a sign signal environment that I personally look for, and I've never called a correction or bear market unless it was present at the time. So I'll show you that. And as of right now, I don't see anything like that. But unfortunately, we don't need, right? The market doesn't have to ring a bell at the top. Okay, I wish it did, but it doesn't. But I thought this was an interesting chart. It's taking the civilian unemployment rate with a 3-year moving average. And somebody just kind of put this together, and you can let your eyes do. You decide yourself what your eyes tell you here and what you think. But what you're seeing is obviously the unemployment rate being in the black and the moving average being in the blue. Whenever that unemployment rate shot above the moving average, a recession has always followed. Even as small as it might have been in 2020, a recession has followed. And I think we have 15, 12 examples here. One, two, three, four, five, six, one, two, three, four, five, six, seven, eight, nine, 10, 11, right? The last one being 11. So, you look back the last 70 years, the last 10 times that this has occurred, a recession has followed. Now, it's not a timing tool. It doesn't mean a recession follows the day after. Could be weeks, could be months, could be any number of, type of a lag. And again, place whatever importance you deem, you know, maybe you don't care. I'm a huge fan of, when it comes to navigating markets and preparing for what's in front of us. Probably the best guide we have is history, not necessarily what's currently happening, right? What's currently happening is kind of silly if you think about it, because things are always good when markets are at the top, right? Just like things are always terrible when we're at the bottom, right? So it's very difficult to say because things are great right now, whether they are or not the point. But if things may be great right now and we think things look great right now, it's very difficult to say, well, that's the reason the market will continue to go higher, right? Because, well, of course, that's the way it always looks. Okay, no different than, go back to the low in 2009. I think it was like a couple weeks before we bottomed. Even Warren Buffett was like, didn't see a low in sight because of how bad things looked. And remember, unemployment went lower and lower and lower after the market bottomed in March of 2009. So it's very difficult to look at the present and say this is what we think is going to happen, as much as let's look at history. What has history told us? In a current environment when these things happen. Okay, next one. All right. I thought when we look at the inverted yield curve, a lot of people forgot about this because the longest yield curve inversion. Um, get on with it already. I'm already on with it, Paulo. Um, you know, so I mean, if that's not what you're looking for, you know where the door is, right? But do me a favor, show me a little respect, and don't tell me to get on with anything. You know what I mean? So if it's not what you want to see, nobody's keeping you here. Door's right there, man. Enjoy your day. So anyway, we had talked about this in my calls years ago, and this ended up being one of the longest inverted yield curves in history. And the power of this chart here is typically a recession, assuming one would follow, is going to happen after the uninversion. And you're going to see, obviously, we have uninverted. Okay. Do we think a recession is going to follow? Maybe, maybe not. But speaking of rates, this one I find very interesting. And this is one of the charts I want to talk about when we switch over to the live screen. Okay. I want to talk a little bit about yields and the TLT and such, because this one's interesting to me because of the perception that once we start lowering rates and rate cuts begin, that is bullish for the market. And as you can see here, historically, at least as of late, that has not been the case, right? And you don't even need a chart, right, to figure that one out. Weren't we raising rates through 2022 and 2023? And what did the market do that whole time? Okay. As you know, Easing cycle started last year, and question mark, question mark, question mark, right? What do we got coming, or do we have something coming? And not trying to make a case. I'm just showing you the kind of the data that's out there and what has tended to happen historically, right? So if you look at this historically, specifically over the last 25, 30 years, once they start cutting rates, it's generally not hasn't been a good sign for the market, right? Last, kind of gets a little bit more in our wheelhouse here when we start talking about top heavy markets. Okay. Markets where this doesn't mean that only a handful of stocks are going up. Okay. But when we start looking at the share of stocks, how much heavy lifting individuals are doing when markets start to get a little bit, a little bit top heavy, right? Tends to be closer to the end of a run, not the beginning of a run. So these are some of the things we started reviewing at the end of last year, coming into this year, which does have us kind of, let's just say, being cautious as we go into this year. Let's also not forget simple stuff is we haven't, we really haven't had a north of 10% correction on the S&P since this bull market started. So we're now getting close to 2.5 years in. So things where we might want to say to ourselves, hey, we're not going to be all doom and gloom this year, but would we be all that shocked if, especially when you get into that time of year, summer, fall, right, where corrections have been known to rear their heads and little mini bears and things of that nature? Should we proceed with this year, with caution? All right. So, what's everybody think? Those five charts, what I got, four charts, mean nothing. You think reason to be concerned, cautious, or do you think, quote, as they say, this time is different? That none of that means anything, and history is going to fail this time. What's everybody think? And remember, there's no right or wrong answer. If you think none of this means anything and we're going to have a banner year, if you think, hey, certainly want to be a little cautious out there, I would think that that would be, reasonable as well. But anyway, I'm going to switch on over while everybody's answering there. And we're going to go over to here. All righty. No comments there, no opinions on that, which you don't have to have any, by the way. I like to throw it out there and let everybody make the decision themselves. All right. Now, real quick, just want to make sure you should now be seeing the trading screen over there. Cautious, what goes up? Yeah, I agree. And remember, all-time highs. Yeah, we just hit all-time highs. Yeah, yeah. Increased selectivity can't assume a continued melt up. Yeah, yeah. You gotta have to know, right? Like you gotta be careful. You see these, sometimes you see these people that are just nonstop bullish, and that's kind of silly and naive, right? Like we're not gonna go up forever. Even in healthy bull markets, we're gonna have corrections. So you definitely want to know that it's coming at some point. Um, yeah, the Buffett indicator. Yeah, yeah. That's flashing. Market's expensive. That's a good point too. I've seen a lot of data on that. Extremely expensive. So, so the bottom line to answer the question, of hey, what are we thinking about this year? We're going to trade it like we always do. Okay, we're going to be prepared for whatever comes our way. We always are. Options Gambit, formerly known as the Prof Machine, has been around for it's getting close to a decade now. So we've seen it all. So we're not really, too terribly concerned. And again, I can't stress enough, we would invite, a correction. So let's talk about that. What would I want to see? Our view coming into the market, which by the way, when you come to Options Gambit call, this is kind of what you'll be looking at is just my screen up there. Correction would help the bull market. Exactly. It's always, it's healthy, right? It's a good thing, to kind of wash out some excesses so we can take another run. you know. And let's not forget this too, by the way. You can accept the reality that a correction is coming, but not think it's the end of the bigger bull, right? Sometimes, these kind of bull cheerleaders get their panties in a ruffle when you even mention the idea that like somehow that there's ever going to be a correction, but the reality is that there will be. There always is another one, and we're getting a little lengthy without one. So, but that doesn't mean the bull market has to end, right? And like you said, Vic, watch out some excesses and get going. But all right, so for me, okay, again, I think everybody kind of has their own thing. The last time I called a correction was the last one we had, so let's kind of switch on over here to our S&P. Now, for those of you that are new to me, you're going to see a lot of lines. I do try to tend to keep things as simple as possible, so I don't get too crazy with any kind of magical indicators, right? I focus 99% on just price, right? When we make our trading decisions, okay, just like when we broke out of this little bull flag, our thought was, hey, probably run into new highs now, and here we are hitting new highs. No real shocker, okay? You don't have to make it near as complicated as you're led to believe. You'll find it interesting how many people will just want to talk your head off about the 87 indicators they're familiar with, right? And yet they're not making any money in the market, kind of proving the point. So no different here. Here's the NDX. Okay, last week breaking out of our nice little consolidation should lead to new highs. Here we are, right? So it doesn't have to be really all that complicated. So, what does Gambit do differently than most? We don't overcomplicate stuff, right? The basic fundamentals, that's what you need to win in the market. If you don't have them, then it doesn't matter what indicators you're using. You can use whatever indicators you want. You're going to fail, right? If you're not managing risk, right? If you don't have good risk reward setups, if you can't be disciplined. So we focus on those things that matter. We don't focus on VWAPs and moving averages and all these things that have really nothing to do with successful trading, right? With the exception of you have to have something, right? So I use that analogy of golf clubs. I got to have some golf clubs to play the game, but which clubs I'm using don't have a whole lot to do with whether or not I succeed and have a great round of golf. Okay, me being able to connect with the ball does. My grip, my stance, my backswing, right? Am I lifting my head? Whether or not I'm using Titleist or Nike is not going to make a difference whether I'm shooting an 80 or a 100, right? The markets aren't too much different, but right, that doesn't sell, right? Nobody wants to hear that. So if you've been there, right, you know what I mean. If you've tried using 17 different things in your Bollinger Bands and your Elliott Wave and fill in the blank, right, and you find yourself doing worse and worse and worse, you've actually proven the point. So with Options Gambit, that's what we do. We keep it very simple and start with number one. We rise and fall with the market. So we just want to be on the right side of the market. So we'll always analyze this first. Hey, if we think higher, we're going to buy some calls. If we think lower, we're going to buy some puts. Keep it simple, stupid, right? Now, there are times where we're uncertain, and that's why we love our strangles. So right now, we have our little Tesla strangle going on here, which was more Tesla specific, okay, and volatility specific. This is why we tend to do very well when markets are volatile, okay, because we can be on both sides of the trade. We don't get into crazy spreads and, again, trying to reinvent the wheel. As I like to say, big winners solve a lot of problems. So if we can notch a 200, 300% winner here, really it takes care of a lot of our concerns. Tesla's been moving around a little bit. It had obviously broken out of this formation. Our thought was 2 weeks ago, we were on a call, should come down to 360, but it'll probably break it. Came down to 360, broke it. Our question now, when it rallied back up this week, is well, is it rolling back over from 360 and going to finish moving lower? Or are we going to take out this 360 and run to the underside here? So, since we had a little uncertainty, we decided to be on both sides of it, right? And we have a nice 4 days in the trade. It doesn't matter to us which direction it goes, right? If it wants to rally clear up here, we're going to notch ourselves 300 or 400%. If it wants to roll over and fall down to 300, well, I'll be honest with you, probably wouldn't stay in it all the way down to 300, but we'd be looking for for a similar type of game, right? But everything with what we do in Gambit starts with the market, then we look at individual names, and long, short, or do we want to be on both sides? Okay, keeping it very simple. Now, I want to double back to the market here real quick, okay, because I do want to talk about, as we progress throughout the year, and if we keep notching new highs. Okay, even with all those charts I just showed, we showed them to start the year on one of my market cast calls, and our view at that time was these charts don't change that we anticipate going on to hit some more new highs before any damage comes. All right. Those charts are simply telling us, hey, historically the environment is right for some rough times ahead. That could be 3 months from ahead, 6 months ahead, and sure, all four or five of those charts could be wrong. But want to pan out here a little bit. One of the things I do tend to look at above and beyond price is going to be down here, your RSI, which is your relative strength index. Just a momentum indicator. Some of you might use stochastic, some might use MACD. Right, there's a million of them these days. But as far as what I quote use it for, really comes down to divergences. I do like when divergences appear. I typically won't focus on anything, smaller time scale than say what you're looking at here, a daily chart. So if you look here, this was the lone negative momentum divergence. Actually, there was one that started back here. You can see the tail end of it. But since then, right, you'll notice your price peak here, a little bit of an itsy bitsy pullback. S&P goes on to hit a new high in price, but notice how your momentum peak was lower, right? So you see I've kind of got the line lower as where if I drew a line over top of this, higher, right? So this is that negative momentum divergence. And this can be a pretty good sign of, some weakness. And then that's really what it's telling us, right? Is that we were weaker, the momentum was weaker on those new highs than it was the highs before. And the analogy you want to think about there is kind of like throwing a ball in the air, right? The momentum of which the ball is rising will start to drop before the ball actually does. So you can see the momentum here starting to drop, even though, quote, the ball hasn't started dropping yet. And that's where the phrase comes from. Momentum can tend to lead price, right? Yes, it is, Dennis. Yeah. Do keep in mind, sometimes you'll see me change things up on here. Because I do a lot of education, a lot of teaching. So for a while, I had like the 8, 21, and 40-day moving average up here. So I was trying to teach some students the differences between averages. There is one little quote signal that I keep an eye on with bands, but I usually don't keep them up here. But I don't know, I just kept them up here because I was teaching somebody that signal, which I'll be more than happy to cover later if you guys want. But so yeah, so getting back to the momentum divergence here, I have adjusted it so it's not the standard settings, by the way. So if yours don't look like that, it's because I edited these a little bit. All right. So with that momentum divergence in mind, right, and you'll see what followed. A nice little the other. We've had two 10 percenters. Okay. The second one, if we go back, it's going to be right there. Okay. And technically, the S&P dipped just below the 10% before kind of coming back out of it. Right. So since this guy started back in 2022, we haven't had one of those nasty little 15, 20 percenters, anything like that. So it is getting a little long in the tooth. I think historically, you can kind of get that correction once every year and a half on as an average for what that's worth. But if you follow along here with my charts, you'll notice price is pretty darn effective. And it's unfortunate so many retail traders aren't looking at it because they aren't taught to do that, right? They're taught to be putting up, again, fill in the blank. There's any number of magic indicators these days where all we tend to focus on is price patterns. I'll go back and show you some momentum divergences that were very helpful to us. But if I kind of narrowed it down here, you'll notice this channel that the S&P at the end of the bull going into the bear, about as well defined as a channel as you could ask for, right? Broke out of it. Yeah, bad things happened once we broke out of that thing. All right. You'll notice we formed that nice little bear market trend line that was making its rounds all over the technical analysis world. Okay, you'll notice this rising wedge in red. That was a sign to us that we're likely breaking back down to the downside. And sure enough, we did. Here's another one. Sure enough, we did. Here's a nice little trend line of support. We highlighted back then, tested 4 times. Once we broke, sign we could be in trouble. Right. So when I say we analyze the market, we keep it about as simple, and you just don't really need anything else if you're looking for. And please do remember, by the way, price is the only thing that pays you. So why aren't you looking at it, right? Why are we looking at regurgitations of price instead of price? Okay, and you can follow it all the way along, right? This nice little rising channel here. Once we broke out of it, down we went. right? You can see them. I've got them highlighted everywhere. I leave them up just for teaching purposes so I can show everyone because in today's day and age, it's very difficult to get retail traders to buy the idea that, good old price levels and supply demand zones and chart patterns is really pretty effective if you start looking for it, right? And that's, it's been pretty helpful to us. This nice little orange rising wedge you see here, and if you look, this pretty big pink channel that we're traveling in, that's something we're going to be keeping our eyes on as the year progresses. Okay, so if we break out of this, that would be a cue to us that we could be having some problems. But I want to pan out further here, keeping that or that momentum divergence in mind, and talk a little bit about the last, as I said, the last time that we called a correction. Okay, I don't call corrections very often. I think maybe a 7, 8 total since I've been coaching, and a handful of them you can see right here. Okay, this is your .com, right? You're going to notice this is a monthly scale. Okay, what we're looking at here, these are monthly candles, monthly bars. All right, so the bigger the scale, the bigger the implication of signals and environments, the more reliable those signals and signs can be because it takes so much more for them to occur. That's why when you're looking at your little 1 and your little 5-minute candles, that things fail so often because it doesn't take a whole lot of data to do it. Doesn't mean a whole lot, right? But as you pan out further and further and further, not only are they more reliable, but they don't occur very often. So what you're looking at here is nearly 30 years of price data. And you're going to notice 5 different occurrences where the S&P put in a monthly momentum divergence. The first of which was back here for the .com, and that gave us a nice little 50%er. Here's your financial crisis way before. Remember, everything was fine and dandy, and we started calling for correction / bear market back then, even though everything was supposedly fine. Now, we look back now and we say it wasn't, but at that time, everybody from, you name it, Bernanke, Paulson, you name it, everybody in the Ram Mall, except for Meredith Whitney, talking about how everything was fine, right? But the market was telling us we're running out of gas. Okay, and sure enough, we got that wonderful gem. Here was another one where we got a nice little 18%er. And then here was the fourth one where we got a nice 20% drop. Okay. So now getting to the point, you can see going into 2022, right? Why we said, market sure looks like it's brewing for a correction and or bear market. Now, for those of you that were on my calls at that time, do you remember what range we said we thought the market would fall? Anybody happen to be on those calls and remember how far we said we thought the market would fall? Assuming it does, right? There's no guarantees. Just like all those charts I showed you, hey, no guarantees. First one to admit it. Okay. I'm not going to look at all those and be naive and act like they mean nothing, right? But it certainly is possible. Anybody remember back at the beginning of 2022, if you happen to be on my calls, we said we thought the S&P, if this momentum divergence is going to play itself out like it did the previous 4 times, we think the market should fall between X% and X%. Anybody happen to be on one of those calls? Because I can tell you, we said anywhere from 20 to 50%. Why did we say that? Well, we had basically a 50% fall there, a 50% fall there, close to 20% there, and 20% here. So we said, we got 2 of them that were close to 20%, 2 of them that were close to 50%. How about somewhere between 20 and 50%? Right? And I think we end up with 30 some odd percent. So this is the thing that the only time I've ever, said, hey, look, I think we could be in trouble is when I see something like this. If we look here as of late, certainly there is the possibility, right? We're going on to hitting new highs in price. And if you notice right here at the very edge, we zoom in here a little bit. As of right now, a potential peak is lower than the peak before. So we could be brewing for it. Some think that we're already putting in a massive momentum divergence by looking at this overall peak, and then now this one. Notice how they're getting lower as price has gotten higher and higher. Okay. Now, I'm not going to go that far myself, but if you told me that we put in a 6th momentum divergence here and we started to drop, I wouldn't be surprised if it was a big drop based on that, because I can't argue with that person. right? So we see that environment create itself. We talked about it to death and we said, hey, what would confirm that for us? Price. For us, that was the breakout at the bottom of this channel. And we knew we wanted to be on the bearish side more often than not, although we can certainly recognize opportunities to get long as well. So, for example, this beautiful reversal here, right? It put in a short term low. This big reversal put in a short term low. All right. So, certainly we can go counter trend, but one after the other, we just kept seeing these bearish patterns develop and these breakdowns continue until we broke out here. All right. So, everybody follow me with that kind of momentum divergence? And as I said, there's nothing like that showing right now, although you can see that the excuse me, the potential makings of one are there. So does that mean we're not going to have a correction if we don't have one? Of course not. I mean, we've had plenty of corrections where there was no momentum divergence. I also like to look at weekly divergences. Okay, weeklies can be pretty. For example, the NDX put one in at the bottom of the that bear, right? A positive momentum divergence. I'll show you that one. Just the flip side, right? It's gonna be right back here. Okay. Look at the low, lower low, but then look down here as we put in a higher low in momentum. In other words, we weren't as weak that last time we went down as we were the time before. Now, of course, we waited for price, which was obviously the break of the trend line here. And the Nasdaq's been great at forecasting more highs and such. We had this, you can see a lot of different little flags and such for us. Here's this little cute bull flag we had here, implied a break to the upside, which we got. Here's another little flag here, break to the upside, which we got. Right. So, um, and I want everybody to notice how not using anything really here but price when it comes to making our trading decisions. Big old cup and little handle here that flag was a part of, the SMH, right? Remember all the semis and everybody? Check that out. Similar. Nice little cup. Bull flag was the handle, implied a break to the upside, right? And notice how nothing else was needed here, folks, right? All the gazillion indicators you're told you got to be using, you didn't have to use it all. You can, certainly can. Any number of ways to skin the cat in the market, but that doesn't mean necessarily you need to. Believe it or not, sometimes it's simply keep things, the better you will tend to do. Big question: S&P 7,000 or 5,000 first? Ooh, wow, that is a big question. Okay, I can tell you the first thing that popped in my head, but let me ask everybody else. Everybody see Jake's question? What do you think comes next or first, as he put it? S&P 5,000, S&P 7. Be curious to see. I don't even like the cup and handle. I like any good chart pattern. What's everybody think? I'll be curious what everybody else thinks. And for reference, we are at 6,100. So 5,000 puts you here. I'm going to guess the top of this channel is before 7,000, but what's everybody think? Jake's going 7,000. Pete says 7,000. Alan says 7. Most are going with 7. Gene's going, oh, yeah, here we go. Mike says 5. Gene says 5. That's a pretty good question, Jake. I'm going to go with 5 as well. Oh, you said that because, well, Dennis, I tell you what, I agree with you on that. But I would say most technical analysis out there is being performed by hacks. Okay. It's just, I mean, how many cup and handles if somebody claims a cup and handle that it's not even remotely a cup and handle, right? That's the problem now that you got social media. Everybody and their grandma now can call themselves a technical analyst, right? Something forms a peak and starts to sell off, and they immediately start calling double tops, right? There's nothing about that that's double top. Same thing with head and shoulders and things like that. So I agree with you completely. But I would say part of that is probably because a lot of hacks out there. Now, I will say, if you look back to what I just put up there, I don't really care as much about in this case, call it a cup and handle, call it anything, as much as the level that's being created, the breakout point that's being created. Okay. So right here, whether we call this a cup and handle or not, okay, I do love a good flag, but look at this clear resistance line running right across the top, right? Kind of put that in back in 2021, rough road in 2022, battled all the way back up and remembered it. Okay. And then pulled back from it. So pattern or no pattern, the breakout, right, was the cue that, hey, probably got some good times coming. And obviously we did. But I do think you know, it's not as nice as a look as you could ask for. But yeah, I'm with you on that. But so it looks like it's a 50-50 split there. Um, but I'm a bigger fan of consolidations, Dennis. I love all those little wedge, bull flags, triangles. These are all consolidations. So I like consolidations because somebody's got to break somewhere. We had a pretty good trade here on gold. Right, look at this nice consolidation in the triangle. Once we broke through, the consolidation implies a break to the upside, and sure enough, that's what we got. But look at this nice little level. If we ever came back to 2,800, right, resistance here, here, support after the breakout. We'd be chomping at the bit for another GLD trade on that one, right? So I do like all those types of setups and everything. But yeah, I'm gonna go with 5,000 because I think that well, let's see. I mean, if you got a 15% correction, that doesn't quite get you to 5,000. You'd have to get something closer to the 20%. Does cup and handle have to be on a daily chart? All chart patterns are fractal in nature, right? So you could see them on intraday charts, you could see them on dailies, weeklies, so forth and so on. Just like that momentum divergence I just showed, right? It's fractal. But what you want to remember, the smaller the scale, the less reliable it is. In other words, the more likely it is to fail, and the smaller the implication. So if I saw a cup and handle on a little 1 minute candle chart, I just wouldn't care. But when I see that on the SMH, something that goes back a couple years, remember what it takes to put that thing in, right? And again, any pattern of any kind. The larger the scale, the larger, no different than a candlestick, right? A little hammer candle on a 5 minute candle isn't too terribly pertinent. Doesn't mean it can't play itself out or anything, but it's just, yeah, you're going to fire off a million of those every week. But to put in, for the S&P, like if I try to find a nice, actual true, just back to Dennis and I's conversation, a real hammer candle, okay, not one where somebody says just because it takes the shape of a hammer candle that makes it a hammer. Remember, right? If you read the true definition of say something like that, it's a reversal candle, meaning it has to have something to reverse. So if it forms in the middle of something, it's not a hammer, right? This is not a hammer right here. Okay. So if I had to go back and find one on the S&P, we'd have to go back quite some ways. But I know the one back in 2014 was, I know it when I see it right here. So I remember I was on a call when this one happened right here. So it's going to be the same thing here. Okay. The larger the scale, a daily versus a minute versus a weekly. But I remember I was on Adam's group call. He had his own, it was just called the Adams Stock Club group call or something way back in the day. And it was on Thursdays at 1 o'clock. And I was on that call and we had went through this beautiful sell-off and this reversal. My advice to all my members and students was, hey, time to start looking at some long plays. Well, the next day we're down again. Okay. And so it feels like we're still getting crushed. And I was asked, so do you think we're going to continue going lower? I'm like, no, actually, I think the low is in. Right. But it's got to be legit. And the problem is, anytime anything remotely looks like that, like I wouldn't call this a hammer per se. It's a nice little reversal candle, but oh wow, you fell for a half a day, right? It's not anything I'm going to get too worked up about, right? So anyway, so I don't see anything like that when you talk about the year ahead. If we fall out of this channel here, and again, if I pan out, you'll see it's a pretty nicely well-defined channel, and that's why I like to show all those, Dennis, so you can see if you looked at all these kind of rising wedge, rising channel flag formations, every one of them in these past 2 or 3 years has done exactly what it said it was going to do, right? So this right here implied a break to the upside and new highs. That's what we got. This channel here, once we broke, implied lower. That's what we did. This wedge implies a breakdown. We got it. Short lived, but we got it. So forth and so on. So these types of channels and consolidations and such. Now, what happens if we break out of the bottom of this channel without a momentum divergence? Well, I'd still think we're probably going lower to some extent. Yeah. Now, again, as far as the trades we put on, similar, right? We're looking for the same type of stuff. Again, the Tesla trade we put on, we've obviously Tesla's one of our buddies. We love it. But here's a trade that I wish we had put on. We talked about it yesterday, SMCI. Now, anybody that was on the Options Gambit call when we talked about SMCI taking out this 50 level right here. Do you remember what price target I said the stock, the breakthrough 50 should lead to a run to what price? Anybody remember? I don't know how many Options Gambit people we have on this call. Well, we talked about it this morning during prime time. It's 70. Yep. Those of us that were trading this back in the day, this was pre-split. It was 700. That was the breakdown level, right? That's what made us start getting a little bit more bearish on the stock once we broke down. So once we took out this 50, our thought was, well, at some point it's probably running to 70. I didn't think it would necessarily do that in 2 days, but hey, here we are, right? And so we could look at a trade on something like this. If you wanted to target 70, sort of looks like it wants to get there, but the premiums are getting pricier and pricier. So you could buy the 70s, going to run you 2 and some change. If you got there quick enough, you're not making very much. You're making like 50% return. So I don't know if that's something I would do. I think that we were hoping for some sort of a pullback there, but we never got it. So, but yeah, so I mean, everything kind of revolves around the market, and trying to be on the right side of it. And as you've seen, we don't really make things too terribly complicated. We wanted to do something with Carvana, okay, when it broke through 260. Why 260? Right, just a nice, good level of resistance that the stock had that goes back even before this chart. Once we broke through, notice how we pulled back and started to run up. The problem is stock has earnings, as you can see right here. So we stay away from earnings. We don't get too crazy with it. What else were we looking at? We were looking at Lulu, right? We're a big fan of Lulu. Okay, looked pretty nasty on Friday, but looks like it's trying to reverse and run higher. As of today, even though it's down another $9, it is still holding above yesterday's low. So we'll see how this ends up going. But notice how we kept stalling at the 420 mark. No real surprise. That was the resistance on the gap down over here. All right. And what else here that we're watching? We're still watching, waiting for 3M to make a move. 3M, notice my little green line, it just keeps sitting on top of it like it knows it's there. Been sitting on top of it now for 1, 2, 3, 4, 5, 6, 7 days in a row. All right, so we're trying to wait and see if we're gonna, can we pop on through this thing here, right, and get going again. Looks like we're just consolidating after a nice run, right? So we'll kind of keep looking at that for a potential trade. And we are still looking at Netflix to continue higher as well. So, all right. So anyway, Docu. We haven't looked at Docu in a while. Let's take a look. It looks like it's trying to make a home here at that 85. Keeps reversing off of it. I don't know if I'd do much of it here. I'd probably rather see it above this area. But and when you put it all together, right? Let's take a look here. That back up there. And how is Options Gambit performing with all that in mind? Pretty well. The last 6 months we've had a great start to the year. Looking to add to it this week with our Tesla trade. And as I said earlier, all we do is calls and puts, notching some bigger winners than most. And it really helps offset some things. Overall, historically, that's our track record from the beginning. And, from left to right, that's what it's always going to look like because that's what tends to happen if you can manage to keep your losses smaller than your winners. Certainly, having a good win rate is helpful as well, but I don't really care too much about win rates, nor should you. What you want to care about is, how's the risk reward falling across your trades, right? You can have a 30% win rate and be crushing it, have a 70% win rate and be losing money. So what matters more to us than anything is, are our winners bigger than our losses, right? So hitting new portfolio highs here as of late, but yeah, we keep it simple for our students, and don't overcomplicate things. So other than that, yeah. So one of the reasons we wanted to do a webinar is to invite anyone that wants to come check us out, try to make a few bucks with us. As I said, we do pretty well. If you're into making money, then Options Gambit is for you. Josh has put together a nice promo for us here. Nice little trial pricing for the next 3 and 6 months. He'll slap a link up there for you. Matter of fact, I think I can slap a link up there, but I'm going to hang out here and answer any questions that you might have. Anybody, what kind of questions might we have? And there you go. Yep, do it right up there. Yeah, check it out. You got I think what do we got? 199 bucks for a few months. You want to make a few $1,000s or so over the next couple of months. 100, I think what 199 or something like that. Come check it out. You'll be able to you'll get access to my group calls, where I'll be breaking down these markets for you every single week, every Monday. And then Options Gambit meets every Tuesday morning at 9 o'clock, where we'll start looking at trades to potentially put on. Again, this week we put on the Tesla trade, and we decided to play both sides of it. When do I expect to get out of the Tesla trade? I don't expect to get out of the Tesla trade at any particular time. Am I using looking at view up at all? Not a bit. Not a bit. Don't need it. Don't care. And right there, if you look, the proof's in the pudding. There you go, 199 for 3 months. Price is pretty darn effective. And as I always want to remind everybody, price is the only thing that's paying you. Nothing else is. So if you're not looking at it, you're probably losing money. Is going to be my guess, right? Probably. Let it expire? No, no. It's just I don't. There's no timestamp or anything, Steve. No. So we'll hopefully be in it until we profit. The Tesla trade is a trade that we currently have on an Options Gambit. It's the one we put on this week. So we'll see how that one goes for us. Got a lot of time left in that trade. So sometimes as we get closer to the end of the week, we may have to work our trades, right? So may have to do some rolling and things of that nature. But yeah, you'll find it amazing out there how everyone is worried about what indicators they're using, and then you wonder why they're all losing money, right? So circle back to what we said earlier. Indicators don't have anything to do with you making money, folks. VWAP's not going to make you money. Moving averages aren't making you money. Bollinger Bands aren't making you money. None of these things are what's making you money. I promise you. Okay. If I'm wrong, then please explain to me how investors and traders were making money before software programs. All right. How's that possible? If I'm wrong, then how are investors and traders making money with, say, point and figure charts, right? You got to remember that those are those golf clubs in the bag. Those are just the clubs that you're using. You can use whatever you want. Okay. You can pull down any one of 200 or 300 indicators. They all fail. They all work, right? Doesn't matter what clubs I give Rory McIlroy. He's going to play a great round of golf no matter what I handed him, right? Because he knows how to play the game. Okay. So when you understand how to actually play the game, then you realize what I just mentioned, which is all that stuff's kind of silly. And by that I don't mean using it. It's like the thought that somehow you've got to find the right one is kind of silly. Use whatever works for you, right? If you like candlesticks, knock yourself out, right? They work great. Every indicator on the planet works great if you have the basics of trading down. But nobody ever blew up their trading account because they were using the wrong moving average, right? They blew up their trading account because they're over trading, revenge trading, and putting all their money into one trade, right? It wasn't because of the indicator they used. So once you have that understanding, you'll kind of see why, you know, a lot of traders tend to keep things a lot simpler than you are led to believe through marketing and YouTube channels and all that stuff. Jennifer, yes, I do actually. Let's go back to that. Oh, I never even showed that, Jennifer. Thank you. I'm going to go back to that real quick. I want to go back to that. Yes, I do. Let me show you why. Oh gosh, I can thank you for bringing that up, Jennifer. And I'll look at VRT for you too, Mario. Hold on a second. All right, is my screen back up here? Completely forgot. Circling back to that. Remember the chart I showed you on once we start an easing cycle. Okay. I want to show everybody something real quick. I'm sure, right? Most of you probably know, right? Yields move inversely to bonds, right? So here's your TLT. I want to show you something real quick here. All right. Is your TLT dropping and dropping and dropping as rates have went higher and higher and higher, right? I want everyone to notice down here, this is a monthly scale. Remember what I showed you on the weekly with the NDX and how it hit that low? And then when the NDX went down in the bear market, hit a new low, but it had a higher momentum low. And that was the bottom for the markets. So this is a monthly on the TLT, putting in a positive momentum divergence on a monthly scale. Okay. Now, there's no guarantees. Okay. No guarantees or anything, but I think I've shown you enough to where you can kind of make a pretty educated decision here that it sure looks as if the TLT is warming up for a pretty massive rally. And if the TLT and what would be our price confirmation breaking out of this down channel here, just like when it broke out of this one, which by the way, remember, everybody always talking about their little cutie little indicators, right? Their VWAPs and their volume profiles and all that kind of stuff. Notice how TLT breaking out of this channel probably meant it's going higher. It did. End of story. Right? What you want to ask yourself is, are you psychologically being affected by the belief that somehow you're a better trader by using all these indicators? Okay, very common psychological dysfunction with retail traders. How in the world could I be a great trader if I wasn't use Elliott Wave? If I wasn't using the 8-day, 21-day crossover? How in the world could I, right? Psychologically, we think it makes us better than we are. Meanwhile, all we ever do is lose money. Here's Options Gambit doing nothing but making money for 8 years straight. You know why? Because price is king, folks. No one ever said, right? Fibonacci was king. Price is king. Price is the only thing pays. Okay. Now, getting back to your question, Jennifer, if that momentum divergence plays itself out and the TLT goes on a massive rally that lasts for months, if not, let's say maybe years, who knows? What would we expect yields to do? If the TLT is going to go to the moon, what would we expect yields to do? There you go, Jeff. We'd expect them to go down. And that's why I want to bring everybody back to this chart. Like I said, you make the decisions yourself, but it sure looks like the TLT is telling you that what we're seeing here sure let's just say, at least has a chance of playing itself out, right? And think back to 2000 whatever 8 9. Think back, right? When were rates dropping during bad market times, not good market times? When are rates going higher? When the markets are doing well? The complete opposite of what everyone would tend to think. Because now that we're cutting rates, hey, that's going to be great for the market. History has not proven that to be the case. And if the TLT is telling us it's, you know, at least thinking about something brewing here. Hmm. So for me, for 2025, I would just say be careful out there. Don't be surprised if market hits some turbulence sometime later in the year. Okay. Now, if we look at seasonality, when are the most likely? When are the historically most likely times? Well, usually right around now. So February, March sometimes isn't great, but that doesn't look like it's going to play itself out. But we know you start getting in that July, August, September stretch. So we could see the market continue to rally, continue to do well. And then finally, we wash out some excesses. And as of right now, I would not look at that as anything other than correction or otherwise before moving higher. But we'll see. All right. Does that answer your question, Jennifer? Now, if you want to wait on that TLT, again, if we come back here, right, it's the breakthrough this right here. Okay. No different than back here, right? And Lat gave it a nice multi-month rally. But back here, we didn't have that big momentum divergence that we do now. So if we pan out, where do we think the TLT could go in that kind of environment? Well, for us, goal number one would be right back up here in the 100. For those of you who saw me on Benzinga yesterday, this is where I was getting the 100, 102 zone right through here, right? Right back up to this zone, right? Then you'd be putting in what could be a pretty big base. And then if we can take this out, now we're talking about getting back up to these peaks just short of the 110 right there. So those would be our first targets. But I would think there would be a long way to go for bonds. Again, that was a big momentum divergence. And then that would, of course, translate into big implication. You're very welcome. Any other questions before we call it a wrap? Like I said, 199 bucks, folks. Come in for 3 months. You'll be able to hop on a call with me every Monday for 12 weeks. The Options Gambit call every Tuesday for 12 weeks. Obviously, you saw our track record. We can make you a few bucks. If you want to stay, awesome. If you don't, right? We've been on a pretty good run. Although this doesn't show our last week. We did take a hit in our last trade 2 weeks ago, but we were on a pretty good roll there. Oops, sorry, Mario. Let me go back to that for you. VRT. Now, we've played this a bunch of times. We've been doing a lot of strangle action with this because of the volatility here. So playing on both sides. As where it sits right now, nothing about this looks bullish here, especially as we have a market moving to new highs, today and recently. I don't know that I'd be putting a trade on this thing right here. Um, I mean, there certainly is some support when you come through this 105 zone. So I'd say as long as you're holding the 105 area, maybe there's still a shot to move higher. But all right, well, for those of you who decided to hop on board, cool. I will see you Tuesday. Hopefully, I'll be talking about a nice successful Tesla trade. Although so far we're still waiting for it to get its act together. But we got 2 full days after today, so I'm not too terribly worried. And again, we will tend to work these trades as we get later in the week, right? So we might roll our calls down, we might roll our puts up to increase our chances of success, right? Right now we have a pretty wide strangle on it, but it's also not really moving as much as it had been. But We'll see if we can hopefully get that volatility going. But we tend to like to wait to get those premiums as low as possible, and then we will look to maybe do some rolling and such. But hey, Kara, my name is Christian. Let me throw it in there for you. Christian Tharp. And little trivia, CMT. There you go. That is also, those are also my initials. So I am not putting my initials after my name, I promise. How to get the options chain to show? Just right here. Click and trade. Okay. And so when we're on a live call, we'll put this up and kind of look at the different options. Another thing, not only do we keep the trading decisions and stuff simple, we also keep the options simple, right? I don't, even though sure we could talk our heads off about the Greeks and the delta and the theta and all that wonderful cute stuff, not needed. Again, another one of the million ways the public gets duped. Okay, we do pretty well, and I never once ever say, all right, we're looking at the delta of 30, right? For somebody else, but it's not really anything we get too worried about, right? And honestly, somebody think of it this way. The bottom line is if I bought the 360 calls here and they cost me $5 and this thing ran to 380, Greeks aren't changing the fact I'm closing this thing out for 20, right? So knowing those basics can be pretty helpful. But there you go. You got it the first try, Matthew. Yep. I like mayhem better. True story. A friend of mine lost a bet and has to change his middle name to Danger. Kid you not, he's going to do it too. Yeah, Vic, good to have you on the call, man. Good to have you in there. All right, I'm gonna let everybody run, and like I said, hopefully making some of you some money here with Options Gambit over the coming 3-6 months or so. And who knows? Maybe from there you even look for even more. Can help. I'm a coach by trade, so obviously I have a mentoring program as well. So I love working with students, in a more of a coaching setting and helping them win at their trading. So hopefully I'll see some of you in that regard as well. All right. Everybody, have yourself a great one. I'm going to let you run. Make some money this year.